The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
So oil prices are up. There is a focus right now on the miners, which are really suffering in the wake of this Trump tariff turbulence. But I think the stock that is the poster child so far today, so to speak, is Fisher & Paykel Healthcare, FPH. It's already come out and put some confines around what could happen in relation to the impact from these tariffs. It is now expecting FY26 costs to increase due to the introduction of tariffs on Mexico, Canada, and China. It currently manufactures approximately 45% of its volume in Mexico, the other 55% in New Zealand. Roughly 43% of the company's revenue came from the United States in the first half of FY25, with 60% of US volumes supplied from Fisher & Paykel's Mexico manufacturing facilities. So the introduction of tariffs, it says, could delay its expectations to reach its gross margin target of 65% by 2 to 3 years. And it says that it will provide an update on the outlook for 2026 at its full year results at the end of May, with more detail on how these tariffs might play out. David Lane, Ord Minnett, is this a significant headwind for Fisher & Paykel in your mind?
Yeah, I think it is. Yeah, and really with Fisher & Paykel Healthcare, they've been looking at the US as their big growth driver. They are involved in a lot of US hospitals there, and that's been one of the reasons why we've seen that share price rally as much as it has over the last 12 months, because of those growth expectations from the US. The company is now trading, even after today's sell-off of about 6.5%, they're trading at a PE of about 115 times. So the market has been really pricing in that long-term growth from the US market. So while it doesn't mean that their sales will come off, as you mentioned, their costs will increase and that will impact on their margins. So yeah, it's certainly a negative impact. It's good that the management of Fisher & Paykel Healthcare have been upfront and come out with that information straight away, I suppose. But it does mean that, I think analysts will be reassessing the value of Fisher & Paykel Healthcare. We don't actually officially cover it, so I don't have a recommendation on it. But the comparison that we have is with ResMed, and ResMed competes in a lot of the sleep apnea and those sort of medical devices with them. ResMed, they do their manufacturing in Australia, Singapore, Malaysia. They do have some in China and some in the US as well. So they shouldn't be as impacted as Fisher & Paykel Healthcare. So our preference, if you're looking at that sort of exposure, we would prefer an exposure to ResMed rather than Fisher & Paykel.
Well, good, because you answered the question I was going to follow up with. I did speak with Mick Farrell, MD of ResMed, and I asked him about tariffs, and he reckons it could be a slight tailwind for the company because of the competitive landscape and how some of its competitors do manufacture, and of course its advantage from being in the United States. Dual listed, of course, right, but headquartered in the United States. That interview is up online if anybody would like to take a listen. Again, for those of you on podcast, ausbiz.com.au. It is a wealth of information featuring guests like David Lane from Ord Minnett and Kai Chen from MPC Markets. So give us your take on Fisher & Paykel. I mean, clearly this is not the only company that's going to be impacted by these tariffs.
No, absolutely. And I think, David sums it up pretty well in terms of the manufacturing base. I mean, it's a big chunk of it, right? 60% of volumes are coming from the US in terms of sales, and 45% production. So about 30% of their revenue stream is going to be affected by that 25% tariff. So it's not a small chunk. And in terms of trying to relocate, it's not an easy thing. There's so much infrastructure, and if you were to relocate to another country, it's going to take years to kind of rejig that setup in terms of the supply chain. So I think, in the short term, absolutely, it's going to Fisher & Paykel is going to take a hit. ResMed, luckily enough, their manufacturing lines are away from that. Mainly, it's produced in Australia and Singapore. So I think if you are looking for an alternative, ResMed is the kind of the choice to go to. So I think unfortunate for Fisher & Paykel, this is going to hit them pretty hard.
So this is a sell?
Yes.
It's a sell, and is it a buy on ResMed?
I think, if you wanted exposure into sleep apnea machines and general healthcare sector, I would prefer definitely ResMed over Fisher & Paykel. CSL's not too bad as well at the moment. Where
Got
they
it.
are. Yeah.
So it's a sell and an avoid for Fisher & Paykel in light of these Trump tariffs, and a view on ResMed as a bonus as well. That is the stock of the day. We'll get you across the rest of the call in just a moment.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.